the end of the month or at the end of the year, this is what government is taxing you on, right? So
Understood.
yeah,
But what I'm saying is that so both of them have to take
both of them,
qualify.
yes.
I.e., so what if one of them does not qualify and the other one qualifies? If I have revenue
So
of
one has to meet it. One has to
okay,
meet
just
it.
one has to meet it.
One
Okay,
has
okay,
to meet it.
okay.
Yes,
All
one
right,
has
that's
to
what I was
meet
going
it.
to.
Yeah,
Okay,
one has to
so
meet it.
we've left income. I don't think of there's any other thing I can think about outside income. Let's now go to expenses. Or is there
Mm-hmm.
anything with income you want to talk around before we get to expenses? Is there any other issue with income as a SME person has to be aware of?
Yes, yes,
Does the tax man say we have to
yes,
file
yes.
income on please go ahead.
Okay, so let me talk. I'm looking at my slides because I think I was talking offhand and I wanted to look at my
Okay.
slides. Okay, so very important is I will start from your operating deductibles, right? So even as
So
a
we're going to expenses now,
yeah,
right? So
expenses, yes, you are going
okay.
to
Let's
expenses.
so now we've done revenues. I made in 100 million revenues, right?
Mm-hmm.
Now
Mm-hmm.
expenses. Now, what does the law
Okay,
say about expenses? What's the
okay, so
general
so
language?
So let's say you make what is it called 100 million revenue, right? So the law says that your expense there will be what is it called? Expense your expense deductible will be allowable. No, your expense deductible will be all of your gross profits
Mm-hmm.
minus cost of sales divided by cost of service.
You're,
So
you're, you're
okay,
going
that
to
I'm
you're doing
going
accounting
accounting.
for us.
Okay,
So just to
let
say
me let me not do
wholly
accounting.
and exclusively, right?
Okay, yes. Okay, wait, let me make it let me make it easier.
Wholly and
And
exclusively used.
exclusively. Yes,
So
yes.
essentially, if I have an expense that I
Mm-hmm.
used to make that 100 million,
Mm-hmm.
I can claim it. Is that a simple way to say it?
Yes, yes, you can. You can.
No
If you
issues
have
as
a
long as
receipt, you can claim it. Yes, you can.
if I
And
have a
your tax
receipt.
can also be zero as well. You can claim it. You can make turnover of 100 million. And
Mm-hmm.
if you have a good accountant, legally, right? Not you're not no, there's nothing illegal about it. If you incur the expenses, they are wholly and they are exclusive. You can prove it, right? At the end of the day, you can end up paying zero on taxation
Mm-hmm.
because you're not going to spend your money. Like, you have to take away your expenses out of your revenue. You have to take away your expenses. So the taxman is not looking at your revenue as a whole, although it's like a snapshot to say, okay, you made 100 million. If, for example, now, okay, this is where the presumptiveness come into. I will go back to that point again. So the
Mm-hmm.
law says that the taxman has the right or the discretion to look at people that fall into the presumptive tax. So
Mm-hmm.
presumptive tax, the law says that if a person, right, that does not keep an accounting books, that doesn't know an account, let's say you're a novice, you don't know nothing about accounting, and you have a business account, and let's say that business account, you use 10 million naira to start the business, and the business now makes 20 billion, right? The law says, in this case, the law can look at your whole account statement because you do not have records for anything. And the law will
Mm.
tell you, okay, for this money, you will either pay 6% or you pay 8%.
Oh, because I didn't file, they would
No,
presume,
no. You filed. You filed. Because
but
you
they
did
didn't
not
agree
keep,
with the
you're
filing.
not physicalized, because you do not know accounting. So the law
Mm.
is penalizing you for not knowing accounting and not getting an accountant.
Wow.
So if you do not know accounting, you do not
Mm-hmm.
get an accountant, and you just say the lackadaisical attitude anyway, it's easy to just give the lawman my okay. So normally what happens is, I do it as well in my former businesses. I just give
Mm.
my business statements, my business my statement of account from my business account, and then
Mm.
it goes through the taxation processes, right? And
Mm.
I pay my tax. But now it cannot be done this way anymore, right?
Mm.
You need somebody to do the proper accounting. If you say, oh, I don't have any statement, I don't have any record, I don't have any receipts, I just have transaction records in my accounts. So the taxman can now look at that your account and say, this account, 6%, you pay 6% on your total turnover, or you
Okay,
pay
Belema,
8% on your total turnover.
let's be very clear what you're saying, and I hope folks are
Yes,
understanding what you're saying.
yes.
If you make all this profits and you do not
Mm-hmm.
have a professional that
Mm-hmm.
would arrange your books of account and file those taxes. The
Mm-hmm.
taxman, even if you file and you just
Mm-hmm.
don't read prop, the taxman can say, we disagree with this filing and we're going to give you a different tax to pay. The point
Mm-hmm.
here is that you've got to seek advice. You can't just assume that there's debit, credit, and I've filed taxes. You've got to seek advice. Make sure someone that is
Yes.
trained is looking at your books of account. That's what I'm hearing from you here.
Yes, yes, you have to. You have
The
to, because this is where the presumptive tax come into. It's
tax comes in.
presumptive, yes. So
Okay.
you don't have
Question,
received.
please.
Yeah.
Yeah, before you go ahead, someone is just asking here,
Okay.
if I do graphics design, I'm at
Mm-hmm.
home. Do I qualify as under the professional services label? Why he's asking is that because the tax law exempts small business below a certain turnover except professional services. So he's saying it's graphic designing a
Okay.
professional
Okay.
service.
So how do we know? How do we know? Let's even forget about whether it's professional or not, right? You make income. The taxman is talking about the income you make, right? Whether you say it's professional or it's not professional, that doesn't really matter. You're a graphic designer in your house and you make an income that is less than the taxable band. The beginning of, so the for taxes, I think it's for 20 million and above pay 20% or 25 million or 20 million. So we're not sure on that yet because we don't know which one that we're working with, because the federal government and the NAS, we all know what's going on there. So we don't know. But let's assume it's 25 million and you are a graphic designer in your house. As long as you don't make up to 25 million, right? You don't pay tax. But you must file. The fact that you don't make 25 million doesn't mean that you're not going to file your taxes. Even if it's zero, the law requires you to file your tax. So, as a graphic designer in your house, you only file once a year, right? So, once a year, you go to your state where you live, you have to file through the state IRS. You go to your state. Please, everybody, if you're listening to me, go and get your TIN number. You need it. You get your TIN number, you file, right? You will see the process, or you will see how they ask you to file it. So whether or not you make what is it called? You make 20 million, that's less than the average that government wants to tax, you need to still file your tax regardless. But yes, if you fall below, then you don't pay any tax. So this,
Yeah.
they're only talking about people that are above the threshold, not people that are below the threshold. And same go for companies as well.
Gotcha. So I think so I think where he's going to is this, right? All this stuff we're talking about exempts professional firms like lawyers and accountants. They can't really claim most of these things we're talking about. That's where he's going to. So I think he's trying to ask if a graphic designer is going to be looked at as the same as a lawyer and as an accountant. I don't think so.
No, no,
I don't
but
think
but
so.
but the law doesn't really focus on that, because he's quoting one particular place, but he's not looking at the other law, the other things that precede it, and the one
Mm,
that goes after it, right? What he
hmm.
says company income tax is if you make below a certain threshold, which is either 25 million or 50 million, you don't pay
Okay.
tax. So whether you're a graphic designer that's in your house and you make below that, you file zero. So the
Okay.
fact that you only make you don't meet that threshold, you still need to file, and you still need to file that zero.
Gotcha. Belema,
Yeah.
we're going to stop at 11 so I can get questions. But let me also
Okay.
ask, let's go back to income.
Yeah.
What if that company sold a building? They had bought a building at 100 naira. They sell it for 1,000 naira. Just they make capital gains tax. What's the law say about capital gains
Okay.
tax?
Yes. So let's go to capital gains tax. Give me a minute. So capital gains tax, what the law says there is, if you buy a building, right, there's schedules for the capital gains. I mean, for the capital allowance you have. So when
Hmm.
you buy like a building, and let's say the building is 500 million, the law
Hmm.
says you have the first schedule, which is, I think, is about 10%. I'm trying to go through my slides to get to that particular place. It's
What
about
brings that?
10%. So it has 2 points, right? So the first schedule and the annual schedule. So you have to do the first one and the second one. I think all of it will be 25%. Then you deduct it gradually over a period of time. You don't take all of the money if you buy a house. You don't deduct it all of it from your business expense. You have to deduct it bit by bit yearly. And I think the first schedule 10 and 15, then I think it's 25%. So you don't deduct if you buy a house of 500 million, you don't go straight to your accounting and deduct all of them for capital allowance. There's a threshold that you would deduct if you buy a house, if you make capital expenditure.
So there's capital allowance when I invest, correct, right? So when I
Mm,
invest in capital assets, house, tractor, waterworks, I get a capital allowance more or less. Then
mm,
if I make a profit on the sale of an asset, I pay tax on that sale. That's what I'm going to. Like if I
mm,
sell my head office, I
mhm,
pay profit on that sale if I make a profit. That's
mhm.
capital gains. That's what I'm asking. So that's also taxable, right? The gain on the
Yes.
sale of an asset is taxable.
Yes, it is taxable. It is
Okay.
taxable. Yeah, it
All
is
right.
taxable. So they say capital gain is taxable, but it's taxable. It says it's taxable by 10% of the profits. But before you go to the capital gains tax, remember you
Okay.
still
I
need to
think
do
it's
your
10.
accounting.
I think it's thirty
10, yeah,
percent.
no, subject to 10%. Capital gains and losses. No, no, it's subject to 10%, not 30%. 10%. 10.
Okay.
Yeah.
All right. Okay,
Subject
fine.
to 10%. Yes.
Before we run out of time, let's just touch briefly on VAT and withholding tax. Walk us through because lots of people are now saying, I've seen on Twitter, oh, I went to the market, I got charged a VAT. Walk me
Okay.
through VAT and withholding tax. As a
Okay.
small SME, can I just I have to charge VAT, it's mandatory,
No.
or so what's the give walk me through.
Okay. Okay. So first of all, if people want to ask you, if people want to take VAT from you, please ask them. There's a government website that you can confirm if the VAT, if the VAT number is correct. So if you want to come and buy services from me, or you're buying something from, let's say you're buying food from me, and I'm telling you that, oh, I'm putting VAT. The first thing you do, look at the receipts, right? On the receipt, people that are authorized to get to collect VAT from other people, from other businesses or individuals, you have to be registered first by FIRS. You have to also not just being registered. Before you register, you need to meet the threshold as a business. You need to be doing a certain turnover, right? You need to
Mm.
be doing at least 25 million turnover for you to be able to charge VAT on your
Mm.
customers. So if you do less,
Hold on,
yeah,
Belema. So you're
yeah.
saying if a shop in Aba that is
Mhm.
just making 5 million naira
No,
turnover
you have no
cannot
business with
charge VAT.
VAT. No. And
You can't charge
no, you
VAT.
cannot charge VAT. And you know what? It's easy to find out, right? It's very easy to find out. You can go, I will, what will happen is, I think my social media handler is here. The questions, please listen. I know you can hear me. At Paypax, my social media person at Paypax, write down these things for me. So I will give it to you later. There's a website where people can go and search for companies that are authorized, a government website to take VAT. So if somebody is giving you a receipt, look at the receipt number. If that person is not authorized, once you go and put it in the government website, you will see they will tell you that this person is not authorized to take VAT from you. Do not pay them VAT.
Mm.
So if the person is not authorized, it's easy to find out. You don't need to make arguments. Quickly go to the website. You have your phone. Put their VAT number. So the first thing you ask them is, do you have your VAT number? If they say yes, registered VAT number. If they say yes, say, give it to me. Let me search. You search
Okay.
it. If it's not correct, do not pay them VAT. They are not authorized by government to take VAT from you.
Okay. Second one I heard also was that as a company, as an SME company, right?
Yes, yes.
If you pay for VAT or if you buy an asset and that person did not pay import duty or VAT on that asset, that you cannot claim it on
Oh
your balance.
yes, okay, yes. So for example, I pay as a company, right? When you make expense from the company, they have VAT input and VAT outputs, right? So the VAT input is when you buy you when you buy from somebody, right? When you buy from somebody and the person is removing, you paid a certain VAT. Let's say I bought goods and then there's a VAT of 7%. I record it down in my accounting. Then when I buy goods as a company, maybe as a company I purchase generator and there's a VAT on it, I also keep it on my records. So I go to VAT input and output. I deduct the VAT that I have spent as a company from
mm,
what I have bought and what I will have sold, right?
mm,
When I
mhm,
deduct it, the balance is what I give to the government. So let's say somebody has bought a and sold it to me, and the person did not pay proper VAT on generator. I cannot claim because the receipt is not correct. So this is why it's very, very important before you pay VAT on anything, right? And you're a company, it's only a company that are or big company that has big expenses. They are the only ones authorized to collect, deduct VAT back from the taxman. And if the taxman gives you the VAT back, you have those VAT output and input, and you have an extra. When you're filing your tax, right, you will pay a
don't
reduced tax. You
understand.
subtract it from your company's CIT. So it's not like government is giving you money. Government is not giving you money. It just reduce your taxable income. So if you've gone to buy generator from somebody that did not pay VAT on that gen, and then the person has now given you VAT to pay, and you paid it, you cannot deduct it because in their invoice is not linked to the federal system for VAT.
I see.
So you cannot
Okay.
deduct it and you cannot claim it. So this is why
Okay.
it's very important for you to go online and search to make sure that
Before you
the
go.
number on the VAT is correct and they are
Okay.
authorized to take the VAT.
Perfect. Let's pause here so we can get folks to hop in and
Okay.
ask questions. Guys, if
Okay.
you've been listening, we've been talking about personal finances and SME taxes in our tax space today. We've got Belema also sharing those insights. We want to make it a bit of a practical session, not too much on the act, but on all more of the operations on the SME folks. Let me get Optimist of the universe to ask his question. We've got Belema, you've got myself here, and then we'll do Ben and then we'll do Ashola. Optimist, go ahead.
Good evening, Mr. Kalu and the others. How are you doing
How you
today?
doing? Fantastic.
Yeah, my question is about the capital gain tax for small companies. For instance, if I buy a stock and there's an appreciation on the stock. So if I
Mm,
sell the stock, so will there be capital gain tax since it's a small company?
mm. I think that there is, but is the limit now you want to be careful about? Let me, but I don't know what figures we can post out there because we don't have the final one. But what was
Okay.
the one I did see was 150 and 10, right? 150
Yes,
and
yes, you're
10, which
correct. Yes,
which means
150 million.
the
Yes.
total. Look at it in terms of a gross optimist. Look at say let's say the whole share has got to be gross 150 million, but then the profit you make from that transaction has to be 10. It's only at that limit that you pay taxes, the capital gains tax. If you're doing below that, you're not really worried about capital gains for now. It's mostly for big boys in code that they're targeting.
Mm-hmm.
Okay. Does that mean the 150 million threshold and the as a turnover and 10 million naira as a gain for individual? Does that mean it's
For the
Okay,
applicable
let
to
for
me
the
the
small
let me
company?
answer.
transaction,
Let
for
me
the
answer.
transaction, yeah, Belema, go ahead.
Okay, let me answer. So if you bought stock and you made, let's say, 150 million, that meets the threshold where government will charge you on capital gains, right? If now you need everybody, you need an accountant. You need someone that knows accounting because even if you have capital gains, right, there are also capital losses. It's not just capital gains, there are capital losses. So capital gains is placed against capital losses. So even though you've made gain, but maybe you also made loss, maybe you bought something else that's also a capital asset that made loss. You're going to also deduct it from your capital gains. And also remember that as a business, you also have business expenses. So in a financial year, even if you're a freelancer, right? You have business expenses. So whatever thing you did that made you get that capital gain, maybe you paid this, you paid that. As long as you have your invoices, you can already reduce what is profits. Because government, the taxman is not just looking at the 150 million like that, right? It's still regarded as yes, it's profit, but it has to be that at the end of the day, if you have an accountant, that accountant will go through your deductions, your business deductions, and you might end up paying little or nothing. The profit that's now left on capital gains will now be reduced. So don't just look at it as a whole like that. Okay, capital gains 150, but capital gains, you did things that made you get that money. So if you have receipts, then you can deduct it. So the only place where you should be scared or worried is when you don't have receipts to make these deductions, and when you don't have what is it called? When you don't have receipts to make these deductions, and you don't have any business expenses, then now you will pay your tax. You cannot avoid
But
it.
this is only but just to be clear, you can't mix the ordinary taxation with capital gains, right? It has to be
No,
passive income. Do we do passive income rules in Nigeria where you can only claim passive versus passive? Can you go and take a
capital.
capital gains loss and apply to your ordinary income?
No, no,
Do
no.
we mix it in Nigeria with
Capital gains is loss is applied to capital gains profits. So if
alone?
yes,
Okay.
yes, yes, and the same thing for digital asset as well. So if you
Okay.
have digital asset that, let's say you do a cryptocurrency and you made money, right? But maybe during trading you also made losses, you can deduct your loss on your digital assets. So digital asset loss is put against digital asset gains. The same
Okay.
thing for capital gains as well. On anything you sell, right? It's put against capital gains losses. So at the end of the day, they match it. So capital
Okay.
gains go for capital losses. Digital asset gains go for digital asset losses.
Mm,
So
mm,
as
mm.
long as you
So
made losses, you can deduct
yeah.
it. And as long as you also made business expenses, it can be
Mm.
deducted. So
Yeah, so that's his point. So for Optimus, I think what he wants to get is that Optimus number one
Yeah,
would
thank
you
you.
have to do a lot of you have to do 150 to even qualify. And
yeah.
what Belema is also saying that you can also deduct your losses, not just the gain. So if you sell your quote unquote shares, right,
Mhm.
and you make a loss, you can pack that loss. If you then make a profit, you can use that loss to then reduce that taxable profit that you've made on that sale. Yeah.
Or even your business expenses. And also, I will chip this in, right? So my company, Paypax, is a financial company as well. We are specialized in taxation. So you don't have to, we're doing the dirty work for you, so you don't have to do it. So if you go to Paypax, you download us, you use us, there's a part for payroll, there's a part for freelancers, where all of these questions you're asking me is just like a click of a button. Does this qualify for capital loss? Yes, no. You will see everything. Once you put your income for the year, or your revenue for the year, everything is automatically calculated for you as a freelancer, and you only do
Mm.
once. And the same thing goes for your capital gain. So all these questions you're asking me, if you are using our product, our digital product, then taxation is made easy for you. If you're a business, your business expenses as well. Okay, for by the way, for businesses, please, if you have any business and you have more than three staffs, remember the law says that even if you have three staff, you have to give 1% of your payroll to ITF. So payroll is compulsory. You need to do payroll because you need to
What?
deduct from this end of this month, not even
Oh my
February.
God.
From this end of this month, you need to have payroll ASAP. If you don't have, there are penalties for you as a business, and you will pay it. You will really pay
Wahala.
it, yes. So from the
Wahala.
end of the month, whatever thing you do, if you have an accountant or your brother is an accountant, or you want PayPax to do it for you, you can, register on the ERP system for payroll, and then you can streamline all of your businesses, and then you do your payroll for your staff. Because at the end of the month, government says if you do not deduct payroll from your staff, you're going to pay it by yourself as a business. So this is going to reduce your
Hey.
profits. So
Okay.
you must pay it. You must do payroll.
All
You
right.
must.
All right, Belema. I got you. Let's go to Ben. Thank you, Optimist. Ben, you've got the floor. Ben Awokes.
Yeah, Kalu, my friend, thank you very much. Greetings to Belema. You've really touched a lot of very technical aspects of the law. Myself, I've learned a lot, and tax is part of what I do,
Mm-hmm.
at least. But I come in from a broader compliance aspect. I'm very happy that you mentioned the industrial training fund ITF.
Mm-hmm.
and there's also the NSITF.
Yes,
Mm.
yes,
That is
We're still paying those
what do you
things.
call
We're
it?
still paying those
Ah,
things.
yes, you will.
without these things, these are core compliance things in Nigeria.
Yes, these are
NSITF,
yes,
ITF.
yes, you're right.
If you're trying to get contracts, they have other BPE stuff you have to do. This is my
Yes,
business. This is what I do. A bunch
yes,
of stuff I
Wow.
do
yeah.
revolves around these things.
Mm-hmm.
So you can't even work with the government. You can't work with the government if you're not compliant in everything, including
Yeah.
your tax clearance certificate. If you don't have all these things, 10 naira from that government contract will not enter your company.
Mm-hmm.
So all these things are very, very, very important.
Well,
So
God day.
one of the key thing I came to clarify, there was a question Kalu asked. Kalu said, if my total assets are, let's say, 20 million now as a company,
Mm-hmm.
you know, and I do a business and I get paid 1 billion. hmm,
Mm.
Mm-hmm.
Do I still qualify for the CIT thresholds and all that? So
Mm-hmm.
Kalu, immediately that 1 billion enters into your company's account,
Mm-hmm.
your
Mm.
assets have changed
Mm-hmm.
to 1 billion plus whatever was there.
Mm-hmm.
Do you get?
Mm-hmm.
Immediately that 1 billion comes in. So your assets are no longer
All right, so
220 million.
that's a good
Do
one.
you
That's a good
understand?
one. Yeah,
Mm-hmm.
that's a good one. So you are
That,
saying
that
that
that's the main thing
that
that actually
that
brought me up.
cash that cash becomes the asset that
Yes,
they are using.
yes. The
Say
government is
liquid.
looking at cash. They are looking at
Okay,
cash. Yeah.
okay. Makes sense. Makes
Mm-hmm.
sense.
Mm-hmm.
Makes
That's it.
sense.
Cash like that.
Thanks, Ben. That makes sense. Yeah,
Yeah.
yeah. But I would
So
have
thank you.
assumed that
I
they would
just
have
came to
said
clarify
that.
that.
No, no, Ben. You are right. I would have thought they would have said, "Oh, his asset is 50 million naira computer." But now you are saying the turnover itself then goes from income because I hear you, but still,
Now when you're computing your balance
I
sheet,
hear you,
when you're
Okay.
I
computing
hear you,
assets, your liquid position to reflect
I
your
hear you,
assets,
I
total
hear. So
value of
there's
assets.
no escape
so
there. Okay,
Okay.
no
Can I
problem.
can I say
you
something
can't
before
escape
I
it.
forget? I was just looking at my slide now. So when you want to do your business deductions, you have to do like your allowable your profits. No, you start from your adjusted profit. I'll go a little bit of accounting, right? When you deduct your allowable expenses, you can also deduct your interests. Okay, this is important. Let me touch on it. I'm doing this off head. Like there are things I already know off head, and I'm looking at my slides. I'm getting a bit confused. Okay, so for what is it called? Interest. For example, now you are a business person. Oh, this is a perfect example. You are a business person, right? You borrow money to your company. Hmm? The law says that when, as a business person, you borrow money to your company, this is a capital capex. It's a capital expenditure, right? If
So sorry, Belema, are you saying you as
You
a
learn,
person, you borrow
Yeah,
your
you
company
yeah,
learn.
of
money
course you borrow. Of course, you
to your
borrow your
company?
company money. You as a person,
Interesting,
yes,
interesting.
because any money you invest in
Yeah,
your
go on.
company is borrowed. It's not free money because it's no longer free money.
I
Yes,
don't know
Continue.
if I
No,
yes.
agree with
no,
that.
no.
I
Okay,
don't know if the
okay,
law
okay.
agree with that. I don't,
Okay,
Make the
wait,
point,
wait,
but I
Belema.
wait.
see your
Make the
Let me
point. I
point.
say,
see your point.
Belema, make the point. Just
Mr.
make
Khan,
the point.
let me say this. Let me say it clearly. Ben, you have a company, right? You invest money in your company, right? You
Yeah,
invest 10 million in the company.
yeah.
Are you not borrowing that money to the company? Are you giving the company free money?
No, Belema, make the point.
Okay,
Go ahead
okay,
and make your
okay. Let me
point.
No,
make the
no, no,
point.
no, no.
Okay,
Just make the
okay.
point.
So once you what is it called? Once you borrow money as a business to the company, right? What the law is looking at, the law is talking about related persons and third party loan. Remember, all business expenses are 100% deductible, but loans are interest deductible, right? So
Mm.
those interest that you deduct from the loan is 100% if you're collecting that loan from a third party. So if you collect the loan
Oh,
from the bank, you will deduct the interest 100%.
I
But
see.
if you collect that loan, if me, Belema now, I give my business paypacks 50 million naira, there's a cap to what I can collect for each year. I cannot
What you
do
can
it.
claim,
Yeah, that I can
Belema,
claim.
what
Yes, that I can claim back.
interesting,
Yes.
interesting.
But if it's a
So,
bank, I can take I can take all,
100%.
all of the interest 100%. I can claim it back from my
Gotcha,
accounting.
gotcha. But the law, you're right. The law says any sum payable by way of interest on
She's
debts
making a point.
employed in generating the income of the trade, business of vocation is allowable. That's what the law is saying.
Mhm.
So you are saying that if I do this exact same thing, but I am the one, not the interest, the debt is coming from me, not from a third party, I cannot claim 100% of that
Exactly. Not immediately.
interest.
You can claim it
Okay.
later. You can claim it like continuously, but you're not going to claim it immediately. You're not going to claim it
Okay.
immediately. And there's another
All
thing
right.
also the law talks about capital allowance, right? Is two third of adjusted profits. Two third of adjusted profit. So you cannot just also claim all of them at once. So when you
Mm.
finish doing your accounting and you have two third of your adjusted profit, right? You will now take two third of that is what you will now take as capital allowance. Then the
Question
rest.
for you: is this thing in your app or in other apps?
Okay,
So,
no, no,
because most of the guys, someone is
it's
telling
in
me, I
my
don't know
app.
what people
It's
are talking
like
about.
everything I'm telling you right now are things that are in my app. All of the
Okay,
things I'm
so
telling you right now are
so
things
this
that are
is
in my
what the
app.
accountants will do for us, right? So
Yes.
so
So
as an SME guy, what
yeah.
I'm hearing you say is that if I want to finance my company,
Mm-hmm.
it's preferable.
Mm-hmm.
Is it what preferable now? If I go to a bank, I can claim the interest as a deductible.
Yes,
If I go to
100%.
myself, if I
Yes.
use my own money, I can't claim the interest as a deductible 100%. That's what I hear you
No,
say.
no, 100%, not at once. You will
Not
claim
at
it
once.
continuously. Not at
Understood.
once. Yes. Not at once.
Understood.
Yes.
Okay,
Not at
let's
once.
get Ashola. Ben, thanks. Ben, hang on. Let's get Ashola. Ashola, how you doing, sir? Just go ahead.
Good evening,
Good evening, sir.
Kalu. Well done for this space. But before I go on, let me commend a, uh, the discussant tonight. But I want to quickly ask a question before I go on to what I want to discuss. Is this space a sponsored space?
Yeah, we'll put it there. If you look at the flyer, you say powered by Paxville. It's down the flyer. Correct.
Oh, okay.
Mm-hmm.
So don't let me dwell too much on that aspect. But I just want to clarify like one or two things that she has mentioned during the course of our discussion. But I think for the clarification's sake and for the listeners, so they won't miss it up. They won't miss it up. We have a new set of law, Nigerian Tax Administration Act, Nigerian Tax Act, Joint
Mm-hmm.
Revenue Board Establishment Act, Nigerian Revenue Service
Mm-hmm.
Act. Please,
Mm-hmm.
it should be
Yeah.
better going forward, sorry, to be
Mm-hmm.
quoting from those laws
Mm-hmm.
because from during the course of your discussion, you mentioned the threshold being 25 million. Sorry, maybe it's a
Mm-mm.
slip
I
of
didn't
tongue, but
mention
it's
that. I didn't
now,
mention that. I didn't mention that. I
What did
oh,
you
said we
say?
maybe
don't
that's
know.
what I,
I said we don't know
that
what it is because right now it's debatable. Some of
is okay.
No, no,
It's
no,
okay, ma.
Belema, there's clarity there. Oh. There's
For
clarity
the
there. I'll provide it
sorry
later.
for the sake of CIT you mentioned, it's still at 100 million naira based on the provision of the section 56 of Nigeria Tax Act.
okay.
You can read what's the definition of small business and what's the definition of large company
Mm-hmm.
or small company.
Mm-hmm.
And it's further stated in section 202 of that same Nigerian Tax Act.
Mm-hmm.
So that's that on that. And some of the key statements you've made, if you as a taxpayer,
Mm-hmm.
you have you have liberty to engage a tax practitioner,
Mm-hmm.
a tax person,
Mm-hmm.
an accountant, like you said,
Mm-hmm.
under the provision of Nigerian Tax Administration Act, NTAA, Section
Mm-hmm.
6, subsection 6, 1 and 2.
Mm-hmm.
Please, you can further read that. So you engage a practitioner. It's not compulsory if you have a good hands that can do that. But going forward, before you can have somebody just an ND holder or HND holder. But now you have to be a chartered accountant, a CITN member before you practice tax going forward, or ACCA, whichever one that you have, that is recognized by Nigerian law.
Mm-hmm.
So let me
That's
ask you,
that.
Ashola, what are you saying? You are saying that if I'm a trader and I have an app that tells me how to do withholding tax, I can't use that.
If your app is certified to be
It's not
a tax
certified.
practitioner,
It's not certified. The app is not
No.
certified. I have an app
okay,
Them.
that
the problem
calculates.
is this,
No,
sorry.
hold on. Let me
When
let me
you want to file
explain.
your
Mm-hmm.
returns with Nigerian Revenue
Mm-hmm.
Service, there should be stamp of a recognized
Yeah, but you're not filing with the app.
body.
No,
You're
no,
not
you
filing
actually
with
you
the
are.
app.
Let me answer you. Let me answer.
No, no, I want, but I just want to clarify something
Mm,
because again, the space is an SME space.
mm,
People that are here are folks that do not really know, understand what's going on,
mhm,
and want
That's the
to
problem.
understand.
That's what I'm
I
trying
shall
to say. This is
let me
one of its
let me
points.
land. Let me land.
Okay, thank you. Thank you. Sorry.
Let me land. So when we are quoting tax law this, tax law that, people don't follow those things. People don't understand this, and this is
Yes.
not their field. So it's your field. So yes, you understand that. What I want to do in this space today, sir, is to bring up someone that knows, that can talk to people and say, "Hey, this is what you have to do. This is what you have to do." After it, obviously, you've got to file with an accountant,
mhm,
but you've got to understand what you are doing day to day.
mhm,
If you go to the market in Oshodi, go to the market in Alaba,
mhm,
you have to have something
mhm,
that tells you and tracks your revenues, that tracks your expenses,
mhm,
that aligns with your business strategy. You've heard
mhm,
Belema talk about, if you want to pay VAT,
mhm.
check if VAT is whatever. If there's an app that allows you to check if VAT, the guy charging you VAT, we don't have to wait for that guy to be quote unquote tax compliant before we go to that app to see that guy charging you VAT. It's tax compliant. We've got to do our own homework. If you want to file, you even not with this tax act, you cannot file with a non-chartered accountant, can you? Even in the past act, you still have to go back to a chartered accountant. So I don't want us to get too
Technical.
dogmatic on this. Yeah, with this, Ashola. What you're saying is factual, but you still have to file with a chartered accountant. You can't wake up and just say, I want to file my tax as an SME, a limited liability company, and say, okay, boom, take IR. If you do that, you're going to get hit with a fine. That's what Belema emphasized. If you
Yeah.
go and file and you do it wrongly, you are opening yourself up to a presumptive tax number.
Yeah.
So you can come back, sir. Mr. Shule, you want to come back for Belema maybe response?
That's okay. That's what I want to
Let me
clarify. And
clarify.
thank you,
Let
Paul.
me clarify too. Okay.
Okay.
So when you talked about the app, remember it's the app that you see, but there are chartered accountants working behind the scene, right? So it's not just the app as PayPax. There are people working there that are qualified to do these things. So yes, you're seeing the app, but the app has staffs that are paid and that are qualified to do these things. Then another thing that the app does, actually, you can pay your tax via the app because we're also partnered with Remitter, right? So if you do your tax properly, you can file and pay it, but you're not filing on your own. So we ask you different questions. Are you filing as somebody that's an accountant? Do you have an accountant in your business? You say no. Then the system is filing it on your behalf. If the system is doing it, as a system, we are qualified to do it because this system was made by accountants, a chartered accountant, and the person behind the scene can file this thing for you if you want. If you make maybe an in-house request, you want this accountant to do it personally for you, they can do it. And if you also want to do it on your own, you can also do it. But the app was not just built by somebody on the street. No, it was built with engineers, it was built with accountants that knows exactly what they are doing. So by the law, they are covered by the law. And then if you
Yeah,
want
but
to also pay,
What Ashola is saying is
yeah,
that if you are filing a tax,
mm,
according to the laws now, you
yes.
have to have the quote unquote the legal right to file a tax.
Yes,
That's what I hear him saying. Yeah.
yes. I'm still reiterating that if you want somebody from PayPal to do that for you, we can do it for you. That person is chartered. Then, if you want to do it by yourself, the app itself was done by chartered accountants working with PayPax. Okay, so
Okay.
yes, for example, now for a company, a digital company to have people's for a digital company to have people's records, Kalu, I need to be compliant with the what's it called? NC and NDCPDC, something like that. I need to be compliant with them. So I have the compliance certificate on behalf of my company. So I'm the DCO on behalf of my company. So right now, because of I own the company, I can handle those documents on behalf of the company. But let's assume that I do not have it, right? I can now employ a DCO. That DCO in that company now qualifies my company to handle people's information. So the same thing goes for taxation. if you have people that are qualified, that is working in the company as representative, if a taxman come or the law comes to say who is the person that's qualified to do this thing, you show the person in charge of the accounting thing. This person built it, this person is qualified, this person can do it. I hope I've clarified this, Mr. Shola.
Yeah, but Belema, I'm not sure you can serve as the DCO of the
No, I
company,
can. I
but like
can.
I
I
heard, I
actually
heard
no,
what you
I
said.
can. I can because I applied for it personally and
Are
I
you
got it. I got my certificate.
okay personally? Okay, that means you're
Yes,
personally
I'm
trained in the in data
yes,
compliance and
yes,
cybersecurity.
yes,
Okay, okay.
yes.
Except
Yes,
that,
yes,
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 except
I
that.
did. I filed
All right.
Thank
personally,
you.
and I'm the one handling the data compliance personally for the company. Yes, I did.
Mr. Shola, you good?
Yeah.
Mr. Shola, you good?
Yeah.
All right, perfect.
Thank you, Kalu.
All right, you're
But
welcome.
to wrap it up, your definition of a small company that we are arguing either 50 million or 100 million. So the law,
Actually, there are two numbers in the law. The law you are quoting has two numbers in the
yes,
law.
Yes.
Nigerian
Kalu, there's
tax,
not, it's
okay,
not
Nigerian
Kalu
tax
no
act
now,
is
Kalu
saying
no now.
50. Hold on, sir. Nigerian tax act NTA 2025 is saying 25 50 million, while Nigerian Tax Administration Act is quoting 100 million. We're
Yeah,
still waiting for clarification from the
exactly.
tax of
That's what
Nigerian
I said.
Revenue
That's what
side.
I said.
When
Okay.
that version you are
But
reading,
going
when that
further to
Ben,
that,
Ben,
is
please
that
hold
not the
for
on.
latest
any
version?
small
Please hold on.
company,
There's
please,
no version. We
there are
have to wait
two
for the
or three
gazette.
or three
Yes.
conditions. There are two or three conditions to be qualified as a small company. Please let people get it right. One of those clauses is either you are 100, you have a turnover of 100 million
Mm-hmm.
or 50 million, which is yet to be clarified. Or your
Mm-hmm.
fixed asset
Yes.
does not exceed 250
50
million. If you
million.
have
Yeah.
250 million. If you said you are a small company and you have a fixed asset of more than 250 million, you are not a small company.
Yes.
The law says you are not a small company. And
Mm-hmm.
lastly, if you are company registered with the CAC as a professional service, you are not a small company. You pay. You
These,
qualify to
these are
pay
the
tax.
lawyers and accountants, right?
Mr.
God
Shola, can you
bless you,
repeat
sir.
yourself? Can you repeat yourself on what you just said now?
So the small companies has three main keys. The
Mm-hmm.
first of it is either your turnover is 100 million
Mm-hmm.
or 50 million, which is yet to be clarified by the revenue body,
Yeah.
or your fixed assets exceed does not
250,
exceed 200,
250 million.
250 million. If it exceeds 250 million, you are not a small company.
Mm-hmm.
Then lastly, if you registered as a professional service,
Mm-hmm.
you are not a small company. The law does not include you as one of the small companies. That's what I want to clarify.
Mm-hmm.
That's irrespective
Okay.
of whether you meet the threshold or not. As far as you registered as a
Mm,
PSF, you're not a
yes,
small company.
Yes,
you
because
are
I
not.
like that. I like
yeah.
that.
That
That one hits me. That one hits me because I have a consulting
Yeah,
company.
that I think I was making that point again. So again, just to be clear, right? I'm shying away from mentioning numbers, Mr. Ayala, because we don't have the numbers today. Even the Mr. Ayodele was saying he wants to get the physical printed gazette. So you are totally on point. Let us folks be aware. We're just shying away from saying 50, 100, because we have to get the real physical one because of what that's going on. But fantastic, sir. Thanks, Mr. Shola. I really appreciate your contributions. Let's get is it Peter? Peter Offum. Peter, how you doing?
All right. Thank you, Mr. Kalu. Thank you, Belema. Thank you for the conversation so far. We are really learning a lot. So I wanted to ask about for the law, how does it treat the returns from investment in mutual funds? Yeah, those who invest in mutual funds, be it as SMEs or individual. How does it treat it? And secondly, I want to request if Belema is going to share a slide. Thank you.
Okay. I will share my slides, but not immediately. I'll share it later. I'll share it after this space. Just forgive me. I'm supposed to give Mr. Kalu this slide, but I'm a new mom, so my baby is not letting me breathe. Because
All
of
right.
that, I could not provide this slide. I will share this slide to you. Then on this one, so what the law says, and I do not want to be wrong on it.
I can quote, I
If
can read what the law is
okay,
saying.
okay,
So
say
that way,
okay,
let
say
me just read.
okay,
So the law is
okay.
saying dividends distributed by authorized collective investment scheme, unit trust, private equity, venture capitals, and ETFs. Those are going to be exempt from your income. So if you buy a mutual fund or an ETF in Nigeria, collective investment scheme registered by SEC, the dividends you get from them are not going to be taxable to you. That's what it's saying, Peter.
All right. Okay, so are you treating the dividend as the returns? Assuming you have money market fund, equity fund,
Yeah,
and
the
other.
dividends,
The
the
dividend
money
is
market will give
returns.
you return. Your yield, they will give you either coupon yield or equity distribution. That yield you get, the dividend they give back to you from the collective. It has to be collective,
Mm-hmm.
not you going to buy the share directly. Collective. Yes, it's example. We want to encourage more Nigerians to invest in the capital
Yeah,
market.
yeah.
More Nigerians are doing gambling and crypto, so they are doing this to allow you to go in through collective schemes. So what it means for you, Peter, is this: if you want to invest and you want to take advantage of the tax benefits, try to buy the ETFs, the unit trusts, the mutual fund, not the individual stocks directly. If you want to put money in the bank, maybe you want to look at a money market fund
Mm-hmm.
as
Yes.
opposed to say a commercial paper or a
Yeah.
fixed deposit. But remember, federal government bonds and state bonds are exempt from taxes. So when you want
Yes.
to invest now, you have to have your investing lens on. If you want to
Yes.
avoid taxes, you go for bonds, you go for collective schemes. If you just want to address and get your income, you chase collective individual stocks. Yeah.
Yeah. Okay. So another thing again, in Paypacks, we have our investing arm and we have investment partners that are what's it called? Codros. So if you're investing with Paypacks, our investment partners are giving you money market of 18%. You can invest in what's it called? You can invest in sovereign wealth, you can invest in euro bonds, you can invest in USD, you can invest in what is it called? You can do your fixed deposit. But one very interesting thing about what's it called? About the money market. You know, your money market is like every day. The profit that is made on that day when trades are made. So you make your profit every day. So if you have maybe 20,000 or 10,000 on your money market accounts, if maybe the trade for that day is it can be 10%, it has never gone below 15%, but usually it's between 15% to 18%. So maybe today on 10,000, the trade might be 10% or 15%. You make that money. So every day on your money market, you're making money. So I don't have enough information about investing, but on the 24th, if you're in Abuja, we're doing our launch party, right? If you go to our handle, you will see it there. We have our investment partner coming to talk about everything that has to do with investment. So if you don't want federal government to take your tax, the best place to put it and put it in money markets, in life insurance, put it in pension fund, put it in NHF, put it in all these places. If you don't, federal government will take your money. You will pay it in tax.
Okay.
Yes.
I mean, it's this is what happens all over the world,
Yes.
Peter, and
Yes.
it's called a tax mitigation strategy. So again, it's going to be down to your liquidity. If you
Yes.
make income
Mm-hmm.
right now in America, we're going to pay taxes between now and April the 15th. What many people do, if you have what's called an IRA, people would wait and file, see what they're supposed to pay in taxes, then go and buy an IRA. So that way they can reduce their above the line income. And if you understand what I mean, you file, see the taxes you're going to pay. Maybe you do Tubo tax. If you file on Tubo tax, it'll tell you these are your taxes. Then you go back and go and buy or contribute to your IRA, your individual retirement account, or even make more contributions to your 401k. Then it will reduce your taxes. So that's a legal way to, is that you pay tax or you invest in yourself. You
Yes.
choose one.
Yes.
The money
Yes.
will still go out. Either you
Yes.
pay tax or you invest in
Is
yourself.
it that you give
All right,
government?
no information. Dollar G, you've got the floor. Dollar G is not ready yet. Let's go. No information.
Hello, Kalu.
How you doing?
Good evening. I'm fine. How about
I'm
you?
doing very well, so thanks for asking.
All right. I'm the one who asked the question earlier about professional services. And when someone was speaking earlier, I don't know, I think he has left the speaker stage. I wanted to direct this question to him because he used a specific word when he was describing professional services. He said if you register on CAC as a professional service. So I've been struggling with the definition of professional service. And since he used that phrase, I wanted to know if
Yeah.
it's something,
Adewale,
if it's down to how you open your.
no, it's really those guys, those professional firms, like a lawyer, an accountant, an auditor, a chartered surveyor, anything chartered, anything that needs you to qualify before you can practice. That's what's a professional firm.
Oh, okay. So
Architect,
anything that needs you to take an oath
not
and
oath
all
per
of that.
se, for that maybe you are qualifying, like an accountant, a architect, dentist, doctor.
Kalu, can I come in here?
Go ahead.
Regulated professions, right?
Something like that.
See, at the end of the day, what is going to matter is if you own a company, there's what they call the memorandum of association and the articles of association. Now, in the memorandum of association, that's what they call the objects of the memorandum of association. Those objects are basically the that object. Those objects explain in at least legal terms what the law will see as the activities that this company or this legal entity is carrying or it was created to engage in. So your business activities will be outlined in that object. So if you want to know if you're a professional service firm or not, you go back and look at your objects. If your object states there that you actually engage in professional services or auditing or whatever the case may be, if it's there, then you're going to be seen by law by the CAC and by the NRS as a professional service firm. But if it's not, then you're not going. So it all matters on what is inside that those your objects, what's inside your objects of your memo. So that's the bottom line. You can talk about what you're doing or what you're not doing. The bottom line is what is in your objects. That will determine how the law will see you, and that will also determine how much you pay. This is an issue that I've also taken to some of the authorities too, because like I said, I'm running the consulting company too. So we're trying to, even as an industry, we've been trying to we almost got VAT exemption, but they didn't even give us VAT exemption at the end of the day. So as far as you're a PSF and there's PSF in your objects, then you can't qualify for some of the, benefits.
All right.
So yeah, I don't know if that clarifies it. Yeah.
Okay.
Yeah, that really helps.
Can I
Thank you, Ben.
can I say something? I think the focus should not solely be what you qualify as. Maybe you are a PSF person. What you should focus on, I think the law focuses solely on your income. So whether you're not registered as a professional service person, maybe you're a barber on the streets, right? But your barbing salon is doing so well that you make above the threshold. When you meet the taxable, you will be taxed. So it doesn't really matter. So you should not focus on whether you are a professional service person. You should focus on the income that you make, the turnover that you make within a period of time. This is what I'm interested in.
Okay. Okay.
I can't really hear Belema. I don't know if it's just me.
Yeah, she broke up, but she broke up a bit. But I think the point again, Belema understand that PSFs are quoted specifically in the act. So whilst we agree that your turnover has got to hit that level, they are quoted
Mhm,
specifically that if you're a PSF, so they are saying irrespective of what we've said, irrespective,
mhm,
if you're a
mhm,
PSF, these things don't apply to you. That's what they are trying to say. So if you're an
mhm.
auditing firm, all these things we're saying, packet is not for you. So it's very, very good to know if you're a PSF.
Yes,
Yeah, it's very, very
exactly.
important to know if you are. If
Exactly.
you are, some things that we're saying might not apply to you. That's just it. Yeah. Like Adeola,
Yes.
Adeola, have you spoken, Adeola? Because we're gonna wind it down
Not,
pretty soon.
not yet.
Adeola, hi.
Not yet.
So I do
I haven't spoken
apologize.
yet.
Please go ahead. So what's your
Uh,
question?
okay. Good evening, and thank you for hosting this space. You and Belema, thanks for the explanation so far. Okay, I wanted to find out. if you are a rotational worker, and this applies pretty much within the oil and
Absolutely.
gas space, right? Now, and you get paid in FX. Now the country you work, their tax law applies. When you bring your money back to Nigeria, is
Mm.
that money taxed again?
You're jumping many guns here. You're jumping many guns. Where are you working?
Okay, this is you working, say, in Angola or in Qatar, for example.
So how many days do you live in Nigeria?
So typically rotation is 28 days on and 28 days off. So which gives you pretty much like half of the year in Nigeria.
Okay, so look at where I'm going to with this, right? You only pay tax if you are a resident of Nigeria. So if you spend 183 days in Nigeria, or your permanent home is in Nigeria, or you have a significant economic or family tie in Nigeria, those three things are very important, then you must pay tax in Nigeria. So, irrespective of where you work, if you work in Qatar, in a rig in Qatar, but you spend 183 days in Nigeria, or you have a permanent home in Nigeria, or you have a permanent, or you have significant business or economic terms in Nigeria, then you are going to pay tax in Nigeria. So that income you make foreign is going to be income that you pay tax on. The question for you now is this: because it's salary, it's not dividend, so you can't claim export earnings. So it's pure salary. I think you're going to pay PIT. That's what I think. Belema, what do you think?
Yes, the
Wow.
thing is, whatever it is that you're paying tax, let's assume that the taxman deems you fit that okay, you do XYZ days outside of the country and you do the remaining days here. There's something called tax credits, right? So whatever thing you pay in that country, when you file your tax in Nigeria, it's going to be either reimbursed or you will pay more.
But he will pay PIT. So the point is that, irrespective of the tax credits, maybe
Whatever thing
double
he paid
tax,
there,
he's
yes,
liable to
he will not
pay
be double
PIT.
taxed.
He's
He will
no.
not be double taxed. He will
I
not be
hear you,
double
but let's
taxed.
assume there's no PIT. Let's assume there's no double tax agreement with Nigeria and Qatar and Nigeria and Angola. You are going to pay PIT in Nigeria even if you end that
And
income in
Angola.
Angola. Adela, does that make sense, Adela?
Right. So when she said no double task, so if Angolan tax law applies and I've already been taxed in Angola, and then I come back to
Mm,
Nigeria, and
mm.
based on maybe family ties, you mentioned something like that, right? Am I going to pay another tax in Nigeria?
You will
Sadly,
not be
yes.
double taxed.
No, but he's saying if are you saying if you are let's Google what Nigeria has double tax right now. I'm going to Google it here. Double tax
You will
agreement
not be double
Nigeria.
taxed.
Wait.
100%. You will not be double taxed.
No,
Mr. Kalu,
let's
you will
find
not be
out.
double taxed, but you can confirm you will not be double taxed.
No, let's find out. So
You will not be double taxed.
Nigeria
Yes.
has double tax arrangement with the UK, US, Canada, China, France, Singapore, South Africa, and Spain. Spain. In Europe, we have Czech Republic, Belgium, France, Italy, Netherlands, Romania, Spain, Sweden, the UK. In Asia, China, Singapore, Philippines, Pakistan. Africa, Canada, South
Kalu,
Africa, Rwanda.
Kalu,
So the answer is that you're going to pay
in the
tax.
new
He's going to
Kalu,
pay
in the new
tax.
tax act, eh?
Mhm.
Then let me add to that. In the new tax act, irrespective of the countries that Nigeria has DTTs with, that double tax treaties, irrespective of those countries, there's a provision called the unilateral relief. So the worst case scenario where you're going to see is you might have to pay the tax first, but then you will do some future filing and you get the refund
You
after
guys are
they've
Yeah,
done
you
the
guys you
yes.
guys are giving
documentation
You will
him
back
not
and
be
you
double
forth.
guys are giving
taxed.
him hope.
Yes.
You
You
understand?
guys are giving
Yes,
him
but
hope.
that unilateral relief, I'll find the section in the tax act that talks about it so you can read it, Kalu. That
Adeola,
unilateral relief
Adeola,
protects all Nigerians against double taxation,
Ben.
even
Yes.
when the other country, it does not have a DTT with Nigeria.
Yes.
So I just wanted
Yes.
to clarify that.
You will
Listen,
not be double
he asked a
taxed.
very simple question. He asked a
Mm.
simple question. He works in Angola and Qatar. Will he be taxed? Yes, he'll be taxed. Those countries are not listed here. Listed here in the countries I've
Yeah,
named.
but is he a resident in Nigeria? So first he has to meet the threshold
I
for
just
him to.
giving you his. He has to answer. I told him if he stay 183 days in
Kalu,
Nigeria, or
Another thing he
no,
can do.
Ben, let's not interrupt, please. Let him learn. He's asking the question. If you stay
I want to give him solution.
if you stay 183 days in Nigeria, number two, you have family ties or a business in Nigeria. Number three, your permanent home is in Nigeria. Then any income you make in Angola or Qatar is taxable in Nigeria. That's what the law says.
Yeah, yeah. And I was also alluding to the same thing because you pay tax to your primary residence. So that's why I'm asking if he's a resident going to pay tax in Angola. You pay tax in the place that you declare as your primary residence. So even if he works in Angola, but Nigeria is declared as his primary residence, he's going to pay tax in Nigeria, right?
But
Even if
if it's an American, irrespective of where he declares tax, he will pay American taxes,
yes, and
irrespective.
this is where the tax credit comes in, right? Let's say he's an American and he pays that tax, but he still maintains his
Exactly.
own residence in Nigeria. So there will not be like what is it called? A tax credit for either you pay
Okay.
too much, then the taxman here in Nigeria will not bother you. If you pay less, then you have to now pay the remaining one to the Nigerian government. So for me now, example, right? My primary residence is okay, is in Belgium. So I'm working now. In fact, this is also my own case. Okay, my primary residence is in Belgium. I'm working and I'm making my living. So I have to pay tax according to the Belgium law, right? Because I have to do this to also stay compliant. I have to pay the Belgium law tax. But let's assume that the taxation in Belgium is lower than the taxation in Nigeria, right? I'm still going to pay the balance to the Nigerian government.
Yeah, I don't want you guys to make this thing a bit
No,
complicated,
it's
right?
not
So
complicated. Let me let
yeah,
me go. Let
what
me go
No,
again.
listen.
I
Okay.
don't I know I don't make I'm reading the DMs. So look at he's asking the question many Nigerians are asking,
Okay.
and because he's putting Qatar and Angola, it looks a bit. He's asking if you are a Nigerian that maybe you import cars from Belgium,
Mm-hmm.
you go to Belgium, you import trucks, you go to Belgium, you import trucks, you stay 50 days in Belgium total, you live in your family house is in Ikeja. Your wife is in Ikeja.
Mm-hmm.
Your kids are in Ikeja, but you
Wow.
are spending nearly half the year in Belgium. Is he
Wow.
going to pay tax? The
Almost
simple question
doesn't
is
count.
this.
You pay tax.
No, but I know. I'm just saying the
Yeah,
simple way to the answer is this: are you a resident of? That's the simple question. Where
exactly.
are you? Once you determine your residency, then you ask yourself: is that country do we have a double tax agreement?
Mm-hmm.
If this question, if he was saying he's in Spain, the answer will be no, because Spain and Nigeria have a double tax agreement. So he's fine. He will not pay tax in Nigeria because whatever he pays in Spain, he will claim it, he'll deduct it from Nigeria. It's clear, simple.
No, no,
If it's in
no.
South Africa, yeah, it's
No,
there.
no, wait,
Spain.
Mr. Kalu,
Kalu,
wait,
Kalu, this is
Mr.
what
Kalu,
I'm telling you
wait.
now. There is unilateral relief that goes
You
beyond
are
DTT,
yeah, but you
goes
are
beyond
going
double
to
tax
unilateral
agreements.
that he's not asking, he's asking,
Me,
will
him
he
and I
pay
have the same. Him and I
taxes?
have the same situation now. In this regards of taxation. So I am making my income from Nigeria, right? Example, and I live in Belgium. So my primary residence is Belgium, not Nigeria. And whatever salary I pay myself living in this country, right? That's money. If even if let's say Nigeria, okay, let me do it the other way. Nigeria is my primary residence, right?
So
And
you are going to pay tax in Nigeria,
yes,
Belema,
I will
because
pay
you've already
tax in
said
Nigeria. That's my primary residence.
that's it.
Yes.
End of story.
Okay, yeah.
So end of
Eh, eh,
story.
End of
Hello,
story,
what
yes.
Kalu said is the definition of whether someone will pay tax to
That's all.
Nigeria. Even if your permanent residence is
That's
not in Nigeria, so
exactly
far you are in Nigeria for 100 and how many days?
83.
83. That is the real definition of
Simple.
if you have to pay tax in Nigeria. Now, those credit unilateral, whatever Ben was talking about, if for those that stay in countries that we don't have,
Tax agreements with.
this double tax agreement with, like someone staying in Saudi Arabia,
Mm-hmm.
this is a place that they don't pay paying. That means if you have spent 183 days in Nigeria, you will pay tax. If you don't want to pay tax, that you want to live under the tax relief in Saudi Arabia and some Arab countries, that means you don't have to spend 183 days in Nigeria. You do have to have economic ties or strong family ties in Nigeria. Thank you.
And they've gone further. Let me even tell you what the tax law, they went further. The tax law says if you are a resident of Nigeria and that country pays you income and that country does not tax you, Nigeria will tax you. That's what he's explaining. It's in the tax law.
Mhm.
Exactly.
For
This is for people
non-residents,
staying in
here you
Saudi
go.
Arabia
Yeah,
Mhm.
for
and some other
non-residents,
Arab countries.
employment income. So if you go to Saudi and the Saudi government does not tax you, and Nigeria is not Nigeria will tax you. That's what they are saying in the tax law.
Yeah.
So they've even gone further to even make it that you can't even dodge. So
No.
if you're in Saudi Arabia and they give you exemption and you don't pay, Nigeria will tax you. So be very
So
careful
the
about it.
bottom line is
Kalu, but we're,
someone
we're
is
talking
staying
about
in
double
a country,
taxation.
Yes,
Nigeria will
now
tax you,
that
but it doesn't mean that you'll be taxed double.
no,
not
no, no,
double.
Ben, that's why I say you are going to Z instead of A. But Adeola asked a simple question. He works in two countries. He quoted the countries for us. He's asking, will he pay taxes?
The
So we
question
said,
was about double taxation.
so
That's why it's like, I'm
Ben, no,
wondering
it's
why
the
we now
question.
got to whether
No, no,
Nigeria will
hold,
tax you or not.
Ben. The answer is this: where is Mr. Adeola a resident of? Once you answer where he's a resident of, it answers itself. If Mr. Adeola was saying he's working in Spain, end of story. Because Spain and Nigeria have a DTT. But Mr. Adela is not working in Spain or South Africa or Philippines or he's not. He's working in two nations that do not have DTT with Nigeria, which means we don't have to go to the residence and say, is he spending 183 days in Nigeria? Yes or no? Does he have family in Nigeria? Yes or no? Does he have bills in Nigeria? Yes or no? Does he have a family house, permanent address in Nigeria? Yes or no? When he answers those four questions, he will know if he's going to pay tax in those countries or Nigeria. It's a simple determination. You don't have to argue about it. The law is there. Fill in the blanks. And I'm sure Mr. Adela, I think you're a bit clearer now, right?
Yes,
You're a
yes,
bit clearer now.
yes, yes, it is.
It's
So
not, the law is there. He can be posted to Spain tomorrow, right? Mr.
so
Adela
so
can be.
so so the so the conditions are either or. So if I don't do 183, but I have family ties, strong family ties, or what have you, I still pay
Correct.
tax in Nigeria.
Correct.
All
Those
right.
four things. So if you spend one day but you have a family permanent address. That's what Ben is permanent address in Nigeria. They are going to pay
Mhm.
Nigerian tax because your permanent address is in
Yes.
Nigeria. If your family, if your wife is in Nigeria, your kids are in Nigeria, but you spend 200 days in Italy, no, you have a permanent, your significant family is in Nigeria. You see how they are catching us? No
Interesting.
escape. So if your
Kalu, one
family,
question.
yeah,
I want to ask a follow-up question on Adiola's case. Let's say, for instance, is Angola government has taxed him and they tax him maybe 15%,
Right.
and in Nigeria now he has spent over 183 days in Nigeria. So Nigerian government is to tax him based on his income threshold 20%. So if we factor in the 15%, is he going to pay 55 the remaining 5% to
no,
Nigeria
that's
or
what Ben is now
You're talking
saying.
about double
This
taxation.
is where Ben's thing of that you go and get
Exactly.
that will come in because that's where you now
If you
say
know what you're doing, you
he's
avoid it.
going,
There's
yeah,
a
he's
relief
going
for you
to
to avoid double taxation. That's just my point here. I'm
good.
not
He's going
focusing
no,
on
to
no,
all
no. My
this where
question
you pay
is,
your
he's
tax and
he's
going
all
to
paying
this. My
pay
own
fifty
is
no no
how
percent.
to avoid
guys
double
don't all
taxation. That's my
talk.
focus.
Ben, you want to avoid tax by
Don't
all
all
means.
see answer the guy properly. See
Yeah.
if he's foreign, he will pay the tax in Angola. He will pay it. Then he will go and file. If you keep on saying you can go and file, you're not answering him properly. You say, oh no. He will pay the taxes in Angola. Then he will try. Not there's no guarantee Angola will give him back the money. 'Cause Angola is going to say you are a resident here. We have no DTT here. Pay and go. That's the point I'm making. America will give you back. Will Angola give him back? There's no guarantee. There's no DTT. So the
See, double taxation. Can I say this? Double
I'm not arguing.
taxation. Double taxation simply involves two countries. If
Mm-hmm.
for whatever reason you've paid in Angola or wherever the case may be,
Mm-hmm.
If Nigeria decides not to tax you, you have been safe from double taxation. Nigeria can decide not to tax you based on evidence that you've paid
It's
in
not.
Angola.
It doesn't
Do
work
you
that
get?
way, sir. There's
There's a process. Okay, if you believe so,
It
don't
no,
there
worry.
is
it
an
No
does.
problem.
It
agreement.
does.
This is what
It
I know people
does.
do.
There is an agreement.
I think I agree with
Why do
Kalu here
countries why
because
do
what we are
countries
saying,
sign an agreement? Two nations come together and sign an agreement. You're saying that no, it doesn't work. Two
Now,
nations
listen, let me
come
make my point again.
together.
It's like you missed my point. Let me make my point again now. Two nations come together to sign a double tax treaty. Now, one nation called Nigeria has created a unilateral relief. That relief means that if you're in, like in this guy's case now, if you're working in another country and you now pay tax there, you can bring the document you used to pay tax there and give to Nigeria, your
But
own
he's going
country.
to pay
Instead of
the
Nigeria to
tax.
tax
That's his
you, Nigeria
question.
will give you a tax
Yes,
credit
but Ben, you
based
are
on
going
what you
to
have paid there already.
you are
Do
going
you
to number
understand?
two. He's
So,
asking you. The question is, will he pay the tax in Angola? Yes. He's not. He's wants to know where he will
like I
pay the
said,
tax.
when I started
Yes.
talking, I'm focusing on how to avoid
But
double
why are you
taxation.
for?
I'm not stressing on where
That's
you
not his
pay tax and
question.
where you not pay.
Okay.
I'm
Okay.
focusing on how to avoid double taxation. That's
Boss,
just my own. Do you get?
boss, do you have a follow up?
Kalu, let me just say this. Now, the agreement we have with Canada, US, and the rest is, let's say your threshold is 15% in Canada, your threshold is 20% in Nigeria.
Yeah.
The moment you have paid in Canada, that is all.
Correct.
But if you come to Angola that we don't have anything with, you've paid 20% there, and in Nigeria you have to pay 25%. You will still pay the remaining 5%. But if in Angola there is if it's in Canada and other countries that we have agreement with, you are not going to pay anything. Same way we do have agreement with Saudi Arabia, because they have tax relief. At that point, you pay 100% here in Nigeria.
Mm.
So if you are living in a country, let's say you are in Zimbabwe, you are paying 40%. In
Wow.
Nigeria, you have to pay 25%. Nigeria will not refund you. They'll just get the evidence that, okay, you've paid over there. But the bottom line is that, you will still fight tax. So at the point of filing tax, then if you are still in
That's
a
why you
country that
skipped
we
all
don't have
that
Quadri,
stuff.
agreement with,
Quadri, I
you
have a
pay the
question for
difference.
Quadri. Okay, so Quadri, what do you think the new unilateral relief, what do you think it does? What benefit do you think people can benefit from that unilateral relief?
The relief is for nations that we do not have agreement with, like nation that is not like outside Canada, US, UK, South Africa, and the rest. So like now, let's say I'm earning 100 million. In Canada, they are taxing me 20% of that 100 million. In Nigeria, I'm to be taxed 25%. But because we have an agreement, I will not pay the remaining 5%. There's an agreement. But if I'm staying in Zimbabwe, we don't have agreement with Zimbabwe, I'm paying 20% in Zimbabwe, but in Nigeria, I'm to pay 25%. I will now bring in the unilateral agreement that you said of that 20%. If we take it of 20% of the 25%, then I will balance it with 5%. But if that had happened with Canada, no balance. There's an agreement already. I don't know if you get what I'm saying.
You balance 5%. You say you balance 25%. You balance
Like now
5%.
in
I understand.
Angola, 50%
Mm-hmm.
in Angola, you pay the balance 5% in Nigeria.
Exactly. And by doing that, you've avoided double taxation, right?
But if you are in Canada, if you are paid 20% of the amount in Canada, and Nigeria you have to pay 25%, they will exempt you because they have an agreement. So they will not put you on that threshold again.
Okay, they
They
will
will just
exempt you
go
of
with
that
whatever.
5%. Yeah, that's true. That's true. Obviously, the DTT is better than the unilateral relief. The unilateral relief is to cover for areas where the DTT does not reach.
Yeah,
So that I
so
agree with
Adela,
you.
just to be clear with Adela, yes, you will pay tax in Angola and Qatar, but when you come to Nigeria, you can use the unilateral tax and claim back what you have paid, even if there's no DTT. So just to be clear, yeah.
All
So
right,
you
thank
you
you. I
you,
think
you,
that's
you you
better.
won't lose that money. Yeah, you won't lose that money. Gotcha.
Okay, thank you.
All right, fantastic. I think we're about to wind down. We got about 3 minutes more till 12. I don't see any other questions
Mr.
on
Kanu,
deck.
we did not talk about withholding tax. I think
Go
we
for
missed
it.
that.
Yeah, I think we
Okay.
missed out withholding tax.
Yes,
Yes.
yes,
So
we
first
missed
of
the
all, what is
withholding
withholding
tax.
tax? What is withholding
Okay,
tax?
withholding tax is a tax advance payment. So, example, Mr. A is going to buy something, is maybe doing a service with another company. I'm giving Mr. Ben my go and cut the grass, or you have a loaning company that does loaning services, and I say, okay, Mr. Ben, your company, come and work for my company, right? For that services, I'm going to deduct 10% of whatever money I'm paying to Mr. Ben as a company. But for me to deduct 10% from that money, I have to qualify by my threshold that the company makes. So if my company makes the threshold that qualifies me to pay CIT, and I have also registered with the tax people for withholding as well, then I can collect withholding from Ben. I will deduct 10% of that money as tax advance payment for Ben. So when Ben wants to now file his tax, right, Ben will now collect the credit note. Remember, when I deduct that money from Ben, I have to give Ben a tax credit note that Ben is going to use to offset his tax when he does his filing. So I've paid Ben. Ben charged me 1 million. I gave him 900,000. I take 10% of that money. I pay that 10% to government with Ben's company CNT number or Ben's personal T number, whatever one he uses. I collect it, but it's for company, not for individuals. I collect his CIT, his company T number, and then I pay that withholding tax to government. So I give Ben the credit note. When Ben wants to file his tax for the year, he uses that to deduct his taxable income.
Yeah.
So, he uses that to deduct his taxable income. So, for example, if I have withheld, let's say I've done services, I've sold things, and those people, I collected withholding tax from them, and then I bought things or I did some jobs and the job paid me but collected withholding tax from me and they give me the withholding credits. When I want to file my own tax as a company, I'm going to put that credit note to reduce my tax. When Ben wants to also file his tax for his company, because I collected the 10% of his income, then he too is going to use that as a credit note to offset his chargeable tax, a chargeable income tax. So this way, when companies do business with companies, you're the tax agent by the law to collect withholding tax, but you have to be qualified first to do that.
So for me, what I'm hearing as an SME for me is that when
Mm.
I do my supplies and
Mhm.
I am charged a withholding tax, I should get my withholding tax certificate
Yes, you must get it from the company.
so I can claim it back. What
So
if they
you
don't
can
give me?
claim it back. Well, that's you and the company. But okay, so because I'm doing my launch, I wanted to deduct. I told them about the withholding tax deduction, but then I told them that they did not know about it. So I used that moment to educate them that, well, I'm not qualified as of this moment because I don't meet the threshold to withhold it. But they should know that when you're doing business with company, the company has the right to withhold that tax from the money. And these people, they actually agreed that I should withhold it. But I said, no, no, no. I'm just telling you for information purposes. I do not qualify to withhold the tax. But the thing is, if you withhold the tax, you're compliant. In fact, you're obligated by law to give that person that you're withholding the tax from them their credit note. Just like the VAT as well. When you're doing your VAT, the person that you're giving your VAT to must also have that, be authorized to collect VAT from you because you're going to make the deductions. So the same way you make deductions from VAT is the same way you make deductions for withholding tax. And
Gotcha.
it goes
Yes.
both ways.
Yeah. So just very important when you when you get charged with withholding tax, demand for a withholding tax
Credit
certificate
notes.
so you can
Yeah.
credit note so you can claim that back. Very,
Yeah.
very
Very
important.
important. Yes.
I'm not sure if anybody else has any closing remarks. Anyone that is still here to before we sort of wind down.
Let me just say that in this new tax dispensation, as a business person,
Mhm.
it's very important that you keep all your records, especially when it comes to
Yes.
invoices and receipts
Fantastic.
Yeah.
and stuff. It's very, very important because at the end of the day, an audit might come anytime, and it's best. What I tell
Yes.
people is you always prepare as if you're going to be audited. Always handle your
Yes.
accounting and your
So
documentation as if you're
true.
going to be audited, so
Yep.
that one worst case scenario happens and you get audited, you have all the documents to back up your claims.
Yes.
Because what the tax authority does is when they see a lack of documentation, they
Mm-hmm.
will use that to
Presumptive.
base their penalties, to base their penalties on and their interest and all the punishments that they will give you. Just once they see that, then you can't defend your position again. So it's very important that you keep your documents and you keep all your receipts, your invoices, all those other related documents. Keep everything properly, because you don't know when you will need them to defend your position and save your company money. Thank you.
Exactly.
Completely agree. So
Exactly.
I mean, so this tax law has been very, very controversial, right? I would say this in terms of the whole law. If you look at the whole law in totality, what does it bring? It brings simplification. It brings modernization, and it brings a lot of exemptions for it's very progressive. So if you're really a small taxpayer, really on the business side, though, on the business side, I think it gives you a lot of leeway on the business
Mm.
side. I would say on the business side. On the personal side, I think my biggest issue with with the tax law is the removal of the automatic deduction,
CRO.
i.e., the 20% CRA. That's
Yeah.
my biggest because
Yeah.
it's 20%, but look at it this way, it's automatic. So in the old law, I don't have to do anything. I get 20% tax deduction automatically. In this new law, I have to go do something. Even if that thing is good for me, I still have to go do it. My fear is that some Nigerians would be cash poor. Let's say next year you get married or you buy a new car or God forbid you get someone gets ill and you cannot afford to buy those deductions. Maybe you can't afford to do additional voluntary contributions, or you can't afford to buy life insurance. That means for that tax year, you will not get a deduction that tax year because you didn't buy anything. In the old scheme, you got the 20% automatic, which means even if you bought a car in quote or you were ill, you still got your 20% of your income as a tax break. That's my big issue with this tax scheme. But in terms of simplicity, modernization, and on the business side, the allowance is very, very progressive. So that's just my take on it. We're done with arguing. It's here. The law is here. So we have to learn how to operate within the ambit of the law. Saying you will not pay is not a strategy. Saying you are
Mm-hmm.
angry is not a strategy. You've got to
Mm-hmm.
understand the law and you've got to implement those deductions, exemptions, so you can reduce your taxable income. That's the key word, reduce your taxable income. Belema, you have a closing word there?
Yeah, you said it all. Just make sure your business meets physicalization, meaning get a receipt for everything you do that is business related. So you don't go and eat at KFC and then keep a receipt and call it business expense.
But why
Nobody
can't
would.
why can't I, Belema?
No,
Why
you
can't I eat at KFC? Why can't
okay.
I do
It
that?
depends when you
If I'm
eat it. It depends when you eat it. If
no, but
you eat it,
if I have a meeting
if you
with a
eat it,
client,
you
yeah,
can
if I have
deduct
a
it. It
client,
depends. It depends when you
okay, and
eat it.
because
No,
you
no,
raised
no,
that,
you can't get that. You
No,
can't
no,
get
no,
KFC
no,
eating.
no. It depends when you
You
eat it.
can't
No,
get
you
that
can
deduction.
get it. It
why
depends when
can't I
you
get
eat.
deduction?
It
We're
depends
being
when you
serious
eat
here.
it. Seriously, you
Why
can get it. No, you can,
if I
but
go
it
to a
depends.
restaurant with my partners in McDonald's and I eat,
Is
I
eating
cannot
at
get
how
it.
does eating at
It's
KFC
a
No,
directly?
it does because business
then I
meeting,
don't like
business
when you
meeting.
make these things joking as if this is money we're talking about.
No, no,
If
you
I
can
go to
deduct.
a restaurant and I have a business meeting with in a partner in a restaurant, that's a business expense.
Yeah, you can
Am I
deduct it.
wrong?
You can
So
deduct it.
what's the laughing for?
No, you
Okay,
can
No, no,
deduct
Kalu,
it.
no, Kalu. On that, you can deduct it.
okay.
You
So
you
That's the
can
truth.
because when
deduct
you
it.
laugh,
That's the
people
truth.
get confused. They
That's the
don't know if
truth.
you are being if you are. So
No,
we're talking money.
But
Let's
mostly, Kalu, the average Nigerians don't make money that way. So I
no,
don't want to
no,
make
no,
them
no.
feel that they can
Don't
just
say
go to
that because
KFC and
there are
eat
people
and
that
start
make money
deducting.
that way. There are people that make money that way. There are people that go for
All right,
business
all right.
meetings. So for those people, you can
Belema,
deduct
last
it.
question for you. Belema,
O-
last question for you.
Okay,
Last
Mr.
question for
Kalu.
you.
Yes.
Davido, last question again for you.
Mm,
Davido is a musician.
mm,
He's into showbiz. Mr. Davido buys a Lamborghini. So he's set up a company called
mm,
Davido Limited. And Davido Limited buys a Lamborghini.
mm,
Mr. Davido uses that Lamborghini for videos. Not Davido. Davido
mm,
Limited buys a
mm,
Lamborghini.
mm-hmm,
Davido, the person, uses that Lamborghini for video shoots, for to keep his image up,
mm,
because he says that that Lamborghini is an expense and also a capex being
mm.
used wholly and exclusively to manufacture entertainment content.
O-
Can Davido Limited claim that Lamborghini
okay,
as a business
okay,
expense?
okay. So that expense will not, if he wants to claim it wholly, immediately, because you cannot claim your capex all of it at once. So that means it depends on what he uses the Lamborghini for. So if he bought it with the company, it's completely a business expense because it's not in Davido's name, it's in the company's name. So one, it's a business expense. Then secondly, if he wants to now deduct it, right? Then you now say, okay, what do you use the Lamborghini for? If the video says, I use that Lamborghini to shoot my music videos, I use the Lamborghini to do things that has to do with my music, and I use the Lamborghini every day or every month. So this now goes into operating expense. So the Lamborghini is operating every month for him to help him to achieve the financial activities that now turns to profits, it falls under business expense, not under capex at this point. It's other business expense. So he can, yes, 100% deduct the Lamborghini from
Okay.
the company's expense. As long
So what
as
I
he
hear
meets
you
this
saying,
category, as long as he meets this category, he uses it maybe every month, all the time, for whatever thing he's doing that's business related, right? And it's not in his name.
what if he bought the Lamborghini in his name?
No, he can no longer deduct it because what is it called? First, he will pay VAT on it if you bought it in his name, and you cannot take company money to buy something for yourself without it being
No, okay.
taxed.
Okay. So what
Yeah.
I hear you saying is this: if I am making any revenue
Mm-hmm.
apart from my salary, any revenue
Yes.
whatsoever, it makes
Mm-hmm.
sense for me to incorporate that activity. Is that what I'm hearing you
Yes.
say?
100% incorporate
Okay.
it.
Incorporate. That's what
Incorporate it.
that was
Yes.
where I was going to. Okay,
Yes.
fantastic.
Incorporate it. Yeah.
All right,
Can
guys.
I add something?
Yeah.
Yeah, go for it.
Uh, if he bought it in his name, let's assume it's too late and he bought it in his name. I believe that there's a way he can lease it personally to the company, and then they will deduct the lease fee that the company is paying to keep using that Lamborghini.
In his
The
name
company
or
is
in his
paying
name?
him.
In his name?
If he bought it in his name,
Yeah,
How would
he
it be
can
he,
done?
lease
the
it.
individual,
Yes. Yes. If
the
he bought
individual
it in
Davido,
his name.
can lease it to his own company. Do you get
Mhm.
him? The individual Davido
But
can
no.
lease his personal Lamborghini to his own company,
So
and then he
Yes.
can deduct what they are paying in the lease. You can deduct what they are paying, what the company is paying monthly or yearly in the lease from your from your taxable income.
I don't
You understand
Okay.
what I'm trying to say?
But that was not
I don't
Mr. Kalu's
understand.
question. That was not
I
Mr.
know, but
Kalu's
it's a
question.
good question he's asking. I don't
No, me, I
understand
just
Yeah.
assumed, I just assume maybe he has already bought this Lamborghini in his
No.
name and the company wants to use it. Let's say it's too late. Do you
Okay.
understand?
Yes,
Let's assume it's too
your
late.
scenario is correct. Your scenario is correct. He can do that. It's correct. But that's remember that Mr. Kadu is asking if the purchase of the Lamborghini can be a business deductions. But now you're saying that if he bought the Lamborghini in his name, that means that the money he used in buying the Lamborghini, that money has removed from his company account. It has gone to his personal account, and that means that that money from his company account to his personal account has already been charged. He has already paid the tax on that money. And then
Mm.
he's now buying that car personally. If he now rents the car to his company, of course, he can now collect that one too. In fact, that one now is now coming as an income that's also going to be taxed.
Mm.
Do you get?
That's what I was going.
Yeah,
What I
it's
was saying
coming as
was
an
that
income.
it's
So
an
the
income,
only
not
way,
an expense.
so the only way that what the scenario works is he's buying the Lamborghini with the company money, with the company name. So on the Lamborghini is Davide Entertainment that owns the Lamborghini, not
Okay,
Lamborghini, not Davido owning the Lamborghini. So if Davido is buying Lamborghini with his own personal money, then that means that for the money to be personal, he has already paid tax. So this
gotcha.
scenario no longer applies to him
Okay, but my
anymore.
last question, I promise, last question. What
Mm,
if Kalu, this my example, Kalu lives in a house paid by the company, and
mm,
Kalu drives a car paid by the company? How
mm,
would I record that as a person?
mm.
And would it change if how would it be recorded in my own personal books? Is that house and that car, is it income to me as Kalu individual? The house in
Okay,
Ikoyi, the Mercedes Benz is paid by Kalu Limited. Is it
okay,
income to me?
okay. So, for example, Mr. Kalu works in Mr. Kalu Limited, right?
Yes.
Okay, and then Mr. Kalu Limited has given Mr. Kalu company car, company
Yes.
house, and everything.
Yes.
So the
Yes.
position of the law is that the cars that is given to Mr. Kalu the law is going to look at the, what is it called? The equivalent of that car, the worth of that car, the worth of that house is going to fall under your chargeable income. It's
Mm,
not free. So the fact that the company is buying it for you doesn't mean that it's not going to form a salary base where it's deducted
mm,
in tax.
mm,
So yes, if the company has bought it for you, but they will now look at, okay, that house costs 10 million,
mm,
the car costs 20 million. They are
mm,
now going to bundle it up in your gross salary.
mm. So
So
that
you
those,
pay
those,
for it.
those benefits in can become part of income
Yes,
to you.
yes, yes. It makes up
Okay.
your gross
So
salary.
why why
Yes.
why was it different with Davido? Davido's company also bought him a car. So how come he gets a deduction? I don't get a deduction.
No, no, no. I think we're mistaking it.
No, I'm asking a question for
No,
food to learn.
no,
Don't think I'm asking this. I'm asking you a
no.
question for
Yes,
food to
yes,
learn.
yes,
So
yes. I
why is it
understand.
still why can't
It's
I
different.
claim that?
It's different for Davido because Davido company purchased it. Davido is not owning the car. The name, the owner of the car is Davido Limited.
Okay,
So
what if
David,
my company gives me the car with Kalu Limited and I drive the Benz? The house is owned by Kalu
no.
Limited.
So if all of the company's name, for example, now, okay, how do I put it? If all of the companies, if the company gives you the house and the car, it forms your base salary, right? But if Davido Limited buys a Lamborghini and Davido uses the Lamborghini, it's a different scenario. That
Mm,
can be deducted in tax. It doesn't make up your gross salary. But you say the company buys it, whether the
mm,
company is buying it for Davido or the company is buying it for Mr. Kalu Limited,
mm,
there's a purchase, right? And it
mm,
was made
mm,
by the company. It's going
mm,
to be done as an expense at the
mm,
end of the day. But the beneficiary of this one now, it now forms your base
mm,
gross pay, benefit in
mm,
kind. So this
mm,
usually happens when you are in an employment contract with
mm,
somebody.
mm.
So if you're working for yourself, you're also paying yourself. So
That's
that's
where I
business in
wanted to
kind.
go, Belema.
Yes, yes, that business in
That's where I
kind, it
wanted to
still
go.
makes your gross salary. It still makes your
Good.
gross salary.
Why,
It
why,
still
why-
makes
this is
your
where I
gross
wanted to go.
salary.
I was trying to make you to differentiate between an
Yeah.
owner and an
Mm.
employee, an
Yes.
owner and an employee, and I thank God that you found us. And I'm saying it because I know people are understanding what we're saying. If you are an owner, you are different from an employee, even if it is your company. If
Mhm.
your company employs you, you're an employee, right? But if you own the company, you're an owner. So do with that information what you will. It's been a fantastic Sunday, guys. I think I've learned a lot myself. I know lots of folks have learned a lot as well. Lots of DMs. Again, it's hard to read DMs. I just wanted Belema to read through. And of course, she has to go back to her baby. So we do appreciate you coming in. Belema,
Yeah.
again, you said you are launching your pay
My
packs. When
Yeah,
was
on the
it?
24th of January in
Okay.
Abuja at Wash Blanc. If you
Okay.
are interested, please go to our PayPax accounts and fill the form. And also, if you have any questions about tax, you want to know how we can help you with your taxation, please hit the PayPax DM. All of your questions, I will answer them. So the graphic designer can make it as what is it called, as a flyer where we answer all of the questions you might have. So even if we're not able to treat your question particularly today, right now, you can still continue the conversation after the space has ended. Flood
Fantastic.
to the DM and ask us these questions. We'll treat them one after the other and we'll make it in a flyer so every other person can see it.
Belema, can you also give gifts of my book to folks that ask really nice
Okay. Yeah.
questions?
Yes, yes, I can. I can give gifts. So the issue now is, where do we get the books in Nigeria? So if you're someone that can get Mr. Kalu's book in Nigeria, we want to give 3 of Mr. Kalu's books because you have to be in fact, finance is something everybody needs to know. Everybody needs to know finance. And please, before we end, I just want to touch this last thing, right? I know the Nigerian government is trying to take your money, but there's something they did that I think is a bit clever. Even if I see it as clever by half, because they are charging 70%. They say if you earn less than 70%, then they are not taxing you. It's another story. I don't want to go into it. But at least they are incentivizing you to have a pension account. So if you're working in an employment, so as an employer, if you don't have up to 15 staff, you're not required by the law to register with Pencom. But you as an individual, you can register in Pencom. So imagine you're 24, right? And remember, you can put 8% or 10% of that your money, whatever salary you're being paid, if you're a freelancer, into your Pencom account. Imagine you start doing that every month, 100,000 every month until the day you're 50. You'll be a millionaire and you retire without having your children to give you food, right? So take
Mm,
advantage of these laws. Imagine
mm,
you're paying for your NHF, right? Now, if you're sick, you don't have to go and look for contributions, buy medicine, because you're already paying for your insurance. And also that's life insurance premium annuity. Please take advantage of it. If you do not do it, Nigerian government will take your money. So do not let them take your money. Do it. Do it is really, really important. Register for your life insurance. But one thing I will advise you: do not tell the person, the heir, the next of kin. Do not tell anybody that you register. This is a general advice. I advise you to do it, but don't go and tell anybody that you've done it, because now they can now kill you to take your
Oh my
insurance,
God,
because there's a lot of money
Belema.
on the insurance if you die. But
uh,
just imagine that you enter into an accident, you die. Your family are not going to cry about
Belema,
what is it called? Uh,
Belema, rather, I'll say it this way, right?
yes.
Buy life insurance
Mm-hmm.
and put your trust as the beneficiary.
Mm-hmm.
So this way, right? If you pass away, the money goes to your trust. Have a trustee, it can be a corporate trustee that then takes over your wishes. So if you have daughters, you have sons, you have grandparents in the village, you support maybe your church in the village and all that. Instead of writing a will,
Mm-hmm.
write a trust and
Yes.
say, should I pass away, all
Mm-hmm.
my money should be used to educate my daughters. When my daughters are fully educated, give them a life salary of 1 million a month or something like
Yes.
that.
Yes.
Whatever balance I have, send it to my church. You put all these wishes in your trust.
Yes.
You appoint a corporate trustee. There are many of them, ARM, first trustees,
Mm-hmm.
lead trust. They are all over the Lagos. Get them,
Mm-hmm.
corporate trustee.
Mm-hmm.
Then when you buy life insurance, even your
Mm-hmm.
RSA, you put a corporate beneficiary,
Mm-hmm.
not yourself.
Mm-hmm.
And then you can tell your relatives, my beneficiary is the trust.
Mm-hmm.
So nothing happens to you, even if you pass away today, no one's going to get your money
Mm-hmm.
because your trust gets the proceeds, and your trust will then carry out your wishes. They educate your kids, they give money to your kids after they have graduated, and they can support your church or your hobby after you've passed. Testamentary trust. So
Mm-hmm.
even if you have passed away, that guidelines are still going to be taken care of. So do
Mm-hmm.
those things. Use finance to your benefits. Don't do
Exactly.
and then you will turn out well. Belema, thanks so
Mm.
much. We'll talk
Yes.
about the books here. All right,
Yes.
folks. Thank you so much.
Okay.
I really love and appreciate you guys for tuning in here, and I hope you guys learned something today. I'll see you guys next week. Next week, we're bringing a stockbroker that's going to come in and show us